passwords or click suspicious links. Everyone all the time is trying to steal your stuff. So go slow and be careful. There's no point making all this money just to give it to a thief. All right. We're going to be very careful touching any of the buttons that get anywhere close to the microphone. Because if you touch these buttons, microphone shuts off. Then I have to turn it back on 140,000 times. That's how this thing works. It's very finicky. Microphones and the whole, I wish you could see this mess. It's like a whole thing. It's about this. I can't even show you because my hands won't go wide enough, but it's giant. Oh, and the whole red button thing, Joseph, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red buttons that I can see right now. Man. So I don't know. Some of the red buttons I have to hit. But anyway, this thing is, it's finicky. It's finicky. Like an ex-spouse. I can't say ex-girlfriend because that's toxically masculine now. You can't say, matter of fact, you can't even use pronouns because that's toxically something. You're toxically assuming pronouns. Can't even use biology. If you use biology, people are like, you're a toxic scientist. What? Oh man. All right. So real quick, just a note on the BS ADP jobs number. Two things. One, the jobs numbers don't matter. First of all, the ADP they always unwind it because it's always a BS number. Doesn't matter. Well, I can't say always. I can just say in recorded history, 90% of the time it's revised because it's a stupid number. But that being said, it wouldn't matter. The Fed and the central banks around the world, they don't understand money. And you think, well, that's a weird statement to make. How come some dudes on the internet understand money? And these people that their lifelong pursuit is to study money, they should understand money. Yeah. Yup. They should understand money. The problem is, not to be ageist, but they grew up in a time where kind of basic Keynesian economics was the way things worked. In a much simpler time where news didn't spread as fast. Everything happens now in real time. So you don't, the Federal Reserve, again, which there's nothing federal about the Federal Reserve, but that's a whole other discussion for a different time. But the organization of private banks with private bankers and anonymous investors that make up the federal banking system, and of some of which of the heads of those banks are part of the board of governors that spew their old 1960s, 1970s math-based Keynesian bullshit up towards Jerome Powell, who ultimately does whatever the truck he wants anyway, who's rich. I think he's got a net worth of about $50 million. By the way, he did that trading in front of you guys, trading on insider information, because he knows that a bunch of dumbasses that were also, educated in the 60s and 70s, it is what it is, that don't understand how money works. They too, drink every spoonful of dog mess that comes out of these banks' mouths. So these guys just look at the world differently. It is what it is. They're A, rich, B, perverse. I'm not going to say they're corrupt. That's not fair to say. But they've been perverted. They have perverse incentives. The fact that you can be all good. I mean, I'm all for humanity. I want to do what's best for America. I'm going to trade in front of everyone. I'm going to put millions of dollars in my pocket by like quasi insider trading. But I'm here for the people. I care about you. I got to get mine first, obviously. But no, I care about you guys. My name's Jerome Powell. I'm going to go trade on information first. Then I'm going to go to the White House and have a little presser. And then everybody's going to say what they're going to say. And that's going to trickle down to a bunch of dumbasses that watch CNBC. So anyway, and all of that's premised on this idea, this flawed idea that the entire economy can be managed with interest rate adjustments and non-quantitative, non-money monetary policy based on a Phillips curve. So it's so stupid. It's so stupid that you can't. I'll tell you what it's like. I have a friend who runs a hedge fund, a pretty good size one. I mean, not like over 100 million, but around maybe 100 million. Well, actually, I really want to be honest. I have a buddy who runs a several $billion fund. Neither one of these dudes understand inflation. Neither one of them really understand deflation. They just like inflation, things are expensive. Deflation, things are cheaper. That's a very simpleton, like vanilla ice cream way of looking at the world. And if you're using that to manage monetary policy, it's over with. But what do these people have in common? They old, bro. And I don't mean that they're old in age. Well, one of them is. They're old in their thinking. You can't reduce the entire complex economy to a Phillips curve. Unemployment and inflation. That's all you need to know. Everything. Oh my God. It's like that guy's got a hemorrhage. He needs some leeches. No. Leeches are not the answer for everything. He needs leeches. Leeches for everyone. Oh man, can you imagine getting leeches? If Jerome Powell prescribed leeches for the bank, I would not be surprised. Leeches, everyone. Leeches. And that's the thing. And this is why we did a discussion a few weeks ago. For those of you, many of you saw this, where we talked about the idea that they may, not only do they have it wrong, but they may have it really wrong. Where easing isn't really easing. So quantitative easing, the Fed goes into the market and purchases assets. No, they don't, because they don't use money. And if you don't use money, you can't create inflation. So what they do is they use coupons. Bank reserves are coupons, federal bank reserves. They use coupon money, which is not real money. It's like monopoly money. And they strip mine quality collateral from banks. Collateral has a bunch of uses for banks. They don't want to trade it with the Fed. And it's not all banks, by the way, because all banks aren't a part of this. It's about 23 banks, the prime broker dealers. So the Fed goes and takes their quality collateral, which they were using to do a bunch of things, and they give them coupons, which have zero utility. So the banks are like, crap. So if you strip out good quality collateral and then you tell a bank, okay, now that you have all these funny money bank reserves, go make loans. When you go get a home loan, anyone, please, do you go get a home loan and they give you bank reserves? When you go get a loan for a car, do they give bank reserves to I don't know, whatever kind of car you're getting, to whatever company it is? Do they swap bank reserves for your car loan or for your lease or for your home loan or for your rental or for whatever you buy? When you go and get a home equity line of credit, do they put bank reserves in your bank account? No, they do not, because that's not money. You can't go to Home Depot and buy a flipping 2x4 and a hammer and a nail so that you can make a cross and hang yourself on it. They don't give you those things if you give them bankers. They just look at you like, well, that's not money, sir. Only that scenario can't happen because you don't have bank reserves, because no one has bank reserves. It's a placeholder on a bank ledger. That's it. It's just a balance. It's an asset swap. It's a placeholder. It's no different than those fake books that they're just empty pages, but that you put to complete your bookshelf. If I had a bookshelf, I don't even have a bookshelf. I don't think I have anything like that. I don't even know if I have any books. Anyway, my point being, so to Dave's point, they're using old theories and non-existent money to manage a very complex economy. The world we live in is very complex. I don't think anybody, especially with the AI, no one can argue that. Like, we live in a very complex world with complex stuff going on. So if you don't understand the very basics of money, like inflation and deflation, and listen, you don't have to throw a rock that far. I know some great people right here on this network that have no understanding of inflation. They hang on CNBC's bull smoke nonsense every time an article comes out. Oh, dear God, we can run for the corner covers. Look, this is getting deep. This is shut up, God. Everybody, it's like noise trading jackasses. This is why people don't get ahead, man. They can't see the forest for the trees. So today we're going to do our AI news. We're going to look at markets real quick. The ADP numbers nuked the market really quickly, and then things are kind of coming back up. I've got an interesting article on BlackRock, basically BlackRock, Fidelity, and a couple others. They're all meeting with the SEC. Is it a big deal? No, not really. Is it normal? Yes, it's pretty normal. But in this case, I think it's so BlackRock and Fidelity make sure everybody's seeing straight. And it's a little bit like they want to know that the SEC is going to give them the thumbs up. And if not, they're going to need a really good reason why not, for the rules change that would allow a spot Bitcoin ETF. Okay. And then we will reiterate what is inflation, what it's not, and what is deflation. And hopefully the 50 or 60 of us or 100 of us that are here will go out into the world and tell probably no one, because ain't nobody listening to us. You know, anytime someone makes like a blanket statement that's really bad and you hear it and you're like, oh my God. And then they're like, well, tell me why I'm wrong or something like that. I don't even do it. I don't even get into discussions anymore, because it's like explaining particle physics to a monkey. It doesn't matter. You're not going to. We just have to hope that we train the next generation. Well, then you get into the question of, is there going to be a next generation of investors? Maybe not. So we just got to be as smart as we can, make as much money as we can. So there we go. All right. So first things first, we'll look at markets and then we'll bang on from there. We have some cool AI news as well, which I will rocket right through. But let's do markets real quick first. Woo-woo! What's going on in markets? Okay, let's look at the top. We got the Bitcoin. It had banged down. It was actually, last night it got up to 31.5. And then it kind of cascaded down. There was some selling before the ADP numbers. Then the ADP numbers came out. They'll get revised. But there's probably, digging into jobs numbers is foolish, because there's the number that you get and then there's the reality. And you can't just look at job starts, because you have to look, if they took, as an example, if you take a bunch of people that have permanent work and you convert them to part-time, that gives you weird numbers, right? If unemployment goes up, if unemployment insurance, it's just, there's a lot going on. It's not so simple as the headline numbers. So just be very careful that you don't buy into headline numbers and that you don't start. That's noise trading. You don't want to be a noise trader. You just want to be somewhat of a long-term investor. I think 15 to 18 months now is kind of like where you need to be looking. Anyway, Bitcoin, it's fine. It got beat up a little bit, but not so bad. It's down from last night. It's down quite a bit. It's down like 1,400. But from yesterday, it's down. I mean, it's less than 1%. So that's not so bad. Some of the other assets got beat up a little bit more, but not all of them. Some of the AI assets have been doing quite well. I think part of the reason when we get down to the AI assets that many of the Singularity Net assets are doing well is there's a convention in Geneva, AI for Good, and they're talking about a lot of these projects. And I think that's where they made the original announcement yesterday or the day before for Sophiaverse. And then you got a bump in excitement and enthusiasm. So that's cool. All right. So as we go down, what's interesting? Not anything particularly super, super interesting. I mean, I'm looking at the 1 week to kind of see where people's appetite is. Everybody's, of course, right now for the next day, everybody's going to be, it's going to be a rate hike. The Fed's going to rate. They can hike rates all they want. There's a lot of argument that hiking rates is actually stimulative. It doesn't restrict things. And that has to do with the interest rate fallacy and a bunch of other kind of little things that people that just look at a Phillips curve would never understand. There's no point trying to explain it to them. But just understand that it's not so clear that raising interest rates tightens the economy. The idea that raising an interest rate by a quarter point makes changes buyer behavior, reduces core costs. I mean, production managers, production costs, input costs to warehouses, input costs to producers, those have all gone down. They haven't been this low. I mean, if you followed Jeff Snyder, they haven't been this low since 2009. Does that sound like a red hot boom in economy? Like, no, that's clearly asinine. So there's no kind of one correct answer. You have to kind of absorb all these data points and just understand that independently, they don't mean that much. You just kind of have to get a feel for the entire thing. And there's just no easy way to do that. In your own mind, you have to weight these things very minimally. No one thing is all that important. It's the totality. And then it's how rubes and dummies perceive that. Most people are noise traders. So most people are like, they're kind of like meth addicts where they're like up one day, down the next, up one. And so you don't live and die by the percentages. But you do kind of understand a little bit the basic trends. I still think we are, several months out from these markets turning around because the world needs to admit we're in a recession. The good thing is, once the world admits we're in a recession, at least the US, we're already basically halfway out. When you're halfway through the forest, you only have halfway to go before you're out of it. It's the same thing with recessions. Typically, by the time we admit we're in a recession, these organizations look back and go, oh, well, we've been in a recession for X amount of months. Oh, cool. And then we're kind of working our way out of it. So these things to unwind. A recession is not a depression. So there we go. All right. What looks interesting to me? I mean, everything is still investable. I don't think there's any one place to focus. I mean, there's a couple little outliers, but in the AI space, I mean, notable, Cogito, run by our favorite douchey bankers. It had a little bump last night up to 7 cents, back down to 5.5. Listen, hey, finally, no, you're not losing if you bought on day one. You're finally up. I don't know, 10%. Woo, 10%. Yeah. It's not super exciting, to be honest. But you know what? You're not in the negative by 25%. So how about that? Hypercycle, it set an all-time high last night. Well, we're kind of close to it. Remember, bear in mind, these are all very illiquid assets. So it doesn't take a lot of money to move these, to jostle the prices around. don't think that just because you see these things up or down that you can go in and trade these. I just don't think there's sufficient liquidity. Even if you were a trader, there's not enough liquidity to trade these things. You can't bang in and out. It is nice if you're getting paid a little reward for owning these things. It is nice to see them up, but I don't think the real moves in these assets are here. I think the real moves in these assets are later this year, going into the spring of next year, when a lot of software. There was a company yesterday that made, it was either yesterday or Tuesday, and they basically said software engineering is over with. Like, completely, coding is over with for humans. Done. See you later. Bye. If you code for a living, your job doesn't exist. You just don't know it yet. That's going to happen to a lot of jobs. But first, it's going to be people leveraging AI, displacing people that don't. If you're not messing around with artificial intelligence at some level, or at least exploring it, you're not just on the shelf. You've already fired yourself. And that will probably, a couple of people will clutch their pearls and be like, he doesn't know what he's talking. That's going to be always, there's like always like a couple of thumbs downs. I'm sure it's like a dude who pulls his dentures out and clicks the down like button. What is it? Unlike, you thumb down it. I don't like it. Which is silly because like we don't monetize any of these things. So who cares? But I always feel like it's the point. I'd love to see when you get like that little down thing or the up. They don't let you know that data, but it would be interesting if it's like the dude that's like, screw you, screw AI, I'm out of here. Click. All right, cool. Well, I'll see you tomorrow for your next thumbs down. Yeah, anyway. All right. Yeah, Sherwin, hypercycle, and I think it's HYPC, but yeah, you got the basic idea. And CBG had some nice movement in the last, but I think that's mostly about the AI for Good conference in Geneva. Great. Okay, cool. So not really a whole bunch of super magic going on in these markets. I think they're investable, but you got to be very careful. Don't spread yourself too thin. Don't own 45 assets. Pick 5 to 7, understand them, really pay attention to what you're doing. If you're asking questions like, how do I buy this or how do I buy that? Buddy, you're not ready to buy anything. I saw some people, I go to the Telegram groups like for Hypercycle. I'm always curious what kind of questions people are asking. Are they asking about AI compute, tilling, running nodes and things like this? And someone's like, where do I buy token? And I said, well, you're not ready to buy token. If you're banging around a Telegram group looking for links to buy token, you need to go to Google, or you need to go to ChatGPT, and you need to ask, you say, I am an 8th grader who wants to learn about cryptocurrency. Teach me. And then just read every GD thing that they give you, because you are not ready. If you don't understand swaps, don't do them. If you don't understand MetaMask, don't use it till you do. I want to stake everything I have. Yeah, well, but you can't get off Coinbase. So like, slow down. This isn't, this is not a get rich quick scheme. You may get rich. Some of you will get wealthy. But you're not going to do it. You may accidentally do it quickly, but you got to be very careful. You may be in this for years before you hit, and that's if. There's also no guarantee that this whole thing doesn't S the bed and you lose everything you invested, because that's all investments, because no one knows. Anyway, that's my little old slow down spiel. Where do I buy token? What you do is get your ass over to Google and learn how to use Coinbase first, dummy. That of course does not apply to any of you. All right. So let's take a look at the AI news, of which there's some cool AI news. But remember, man, I'm going to put my spin on it. I guess I could put like a little news. I have like a little news thing. This is a kind of a cool. Okay, so let's do this. I'm going to play the news one. Maybe that's a good one for news. Let's see. Let's see what we see. Did you guys feel like you just got blown away with like a news thing? Anyway, it's badass. Okay, let's talk about it. Inflection AI develops an $880 million AI supercomputer. That's a lot of chips, bro. They bought a lot of chips. I'll go into it. OpenAI introduces super alignment. Finally, a place for all those people that talk about AI that don't actually code to talk about it more and do it in a very expensive way. All right. And ChatGPT's growth has finally slowed down. So, I mean, nothing goes straight up forever. So there you go. Bam. All right. Let's talk about Inflection AI. So they developed an $880 million AI supercomputer. You think, did they develop a new chip like True AGI? Well, no. They did what everybody else is doing. They stacked an S load of H100s together. So Inflection AI, which is known for creating personal AI for everyone. Sounds cool, except that this is not that. They've developed an AI supercomputer equipped with 22,000 NVIDIA H100 AI GPUs to enhance its Inflection 1 model. So despite the high demand and scarcity, so you know they had a hookup somewhere, and scarcity of the H100 GPUs, and remember, GPU, think old technology, stack a bunch of it together, and you still have a bunch of old technology. And I say old because, I mean, even the H100 is a new chip. The A100 was their other chip, but these are still GPU-based chips. It's not a new shift. It's not a new paradigm in chip tech. It's not an AI chip. It's just a bunch of GPUs doing AI workloads and deep learning. And okay, you get it. All right. So anyway, Inflection AI was able to cobble together 22,000 units, currently worth approximately $40,000 each. So if you were to buy, if you get one H100 GP like system, it's 40 grand. So, you know, that's expensive. Anyway, well, I guess it's relative, isn't it? NVIDIA, a potential investor in Inflection AI, probably facilitated the company's access to a large number. Yeah, I mean, they probably weren't going to get those on their own, just making like clicking on the internet, making orders. Anyway, the supercomputer will contain 700 4-node racks of Intel Xeon CPUs. Okay. The supercomputer will utilize an astonishing 31 megawatts of power. They're going to basically need to run on hypercycle just to power this thing. I mean, just to be able to, just to get the electricity costs down, they're going to have to run. Anyway, Inflection AI has raised 1.5 billion, a 4 billion valuation. So they have a 4 billion valuation. You think, this is how I think. I say, okay, they have a $4 billion valuation. And I look at True AGI and it's like a 200 million valuation. And I think one of those is cheap. Because what did Inflection AI do? They just took investor money and bought an S box full of chips. They didn't create anything. They just bought a bunch of chips and stuck them together on racks. Oh, God. Anyway, they believe why it matters. Inflection AI anticipates that through this, they anticipate, here we go, forward looking. Through this supercomputer, the AI model Inflection 1 is expected to prove significantly, especially in coding. Well, no joke. If you have 22,000 H100s, I would hope that something improves in your language model. Anyway, we'll see. And then Elon Musk was like, it won't be long before there are many such clusters, some larger. Yeah, obviously. Anyway, all right. So here we go. OpenAI introduces super alignment. Super alignment. This is amazing. I want in. And so here's the idea. Now, I get it. Alignment is important. We want helpful, hopeful, harmless, honest AI. We want beneficial and benevolent AI, the kind that won't like unleash T1000s across the globe to like eradicate humanity. I get that. But sometimes there are AI scientists that don't do any actual AI science. They just go around chatting. And this is a lot of money for these dudes to continue chatting. I get it. This is important, but anyway, here we go. OpenAI is dedicating 20% of its secured compute, meaning they have a bunch of compute power that they've basically sourced. 20% of that is going to be used, and again, just bear with me, is to address the super intelligence alignment problem over the next 4 years and assemble a new super alignment team of talkers. Thing is, these aren't scientists. Anyway, they're researchers, but they've become like travel the globe, sit in chairs, Tom Cruise type talkists. They're talkists. They're thought leaders. Anyway, the team will be co-led by Ilya Sutskever and Jan Leike, some of the smartest AI researchers in the world. I would put an asterisk right there and say that, I mean, they are among a group of AI researchers. I don't know. I've listened to them. They sound incredibly learned. I don't know intellectually if you'd say they're among the smartest researchers in the world. I would say that they are definitely among the best prognosticators in the world. They have the touring circuit on lock. They're like the Anthony, you know what I mean? Like they're the guru thought leaders of the tour circuit. All right. Anyway, super intelligence. What is it? What's the whole point? It's going to help solve global issues. That's pretty broad, but we would assume that a lot of things will be made better, frictions reduced, life hopefully will get better through digital super intelligence. This is kind of like imagining 3-5 years from now when we hit AGI. Now what happens? You know, like when the thing that you're trying to monitor is smarter than you monitoring that thing. Kind of interesting. Anyway, super intelligence holds risks, including human disempowerment and the potential for extinction. They always dangle the extinction carrot, these guys, these researchers. Anyway, but these researchers that are not actually writing code, actually doing research or doing anything other than the tour circuit. Sorry. I'm not supposed to have an opinion on news. The goal of the team is to build human-level automated alignment researcher. So they're going to build an AI that's an alignment researcher, which can be used to scale efforts and align superintelligence. This is a bunch of bullshitty gobbledygook. I'm going to be honest with right now. This is OpenAI virtue signaling. I like Sam. I like the team at OpenAI. I think they have the right ideas, but this is all virtue signaling. You know, AI virtue signaling is anyway. The team will share its research alongside aligning super intelligent AI. Well, we'll see what they share. They'll share what they want. I mean, OpenAI is not open, right? I mean, their code is that their algos are not open. Their code is not open. They haven't exposed. They're not a decentralized, public-facing open source platform. They've exposed nothing, like nothing. So. But no, trust me, they're going to share all their research that these talk circuit researchers are going to do. Anyway, alongside aligning super intelligent AI, continually improving the safety of current models and mitigating other AI risks. I'll tell you the good thing, the good thing about this. These guys are rich, meaning they're rich and idealistic. And so sometimes that works out, sometimes it doesn't. In this case, if they were poor and idealistic, I'd be worried about them getting perverted by the money, but they're rich and idealistic. So I guess I'm okay with it. Like sometimes rich can be a good thing. It's not if you're a banker or a central banker because you just want to strip mine all of humanity because, you know, like people like Jerome Powell and whatever. Anyway, I'm not going to get into those pieces of trash, but in this case, I guess I'm okay with it. And by the way, even though I don't think these thought leader talk show circuit individuals are like deep coding researchers, they're not the kind of people that you would find employed at SingularityNet, stuff like that. they do have their head on right. Like I have listened to Ilya a lot, and I like what I like what these individuals have to say. I don't always agree with all of it, but I do think that their head's in the right place. Anyway, 20% of compute for AGI alignment is a pretty big deal because OpenAI has made it clear that they recognize the risks of AI and are taking the necessary proactive initiatives. Again, this is OpenAI virtue signaling. I don't think this amounts to much. I don't think anyone cares, really. If you're another company or another country, I don't know if you give a crap what OpenAI says that they have deduced privately in their compute resources with their talk show circuit hosts. I don't think anyone gives a shit. If you're North Korea or Russia or China or the US, you don't give a shit. So this is just virtue signaling. Good. Great. Okay. And finally, ChatGPT's growth has finally slowed down a little bit. For a while, it seemed like ChatGPT's growth would never slow down. However, there's like only so many people in the world, and there's only so many people that care about AI because the rest, they're either old, they're aging out of the job force, they don't care. A lot of people don't care. You should care, especially in medicine, where AI is going to, give you longevity, unless you're kind of like old and barely making it, and then you're not happy about living longer. You're like, I don't want to live until I'm 120. I want to keel over at 73. The way my granddad did, like whatever. Anyway, so finally, however, traffic is starting to decline. I think they're down 10% from May to June. Since the end of November 2022, ChatGPT grew from 0 to more than 1.5 billion visits. In March 2023, visits to OpenAI's developer site increased by 3.1%, however. So developers are still coming in. 3.1% in a month is a lot. Anyway, whatever. The release of plugins and web browsing in May did not result in explosive growth. I think most people don't really know how to utilize plugins. Also, ChatGPT isn't the only way to access AI. There is Midjourney and Stable Diffusion and and Anthropic and Bard, and you can go on and on and on. There's a lot of ways to access, but ChatGPT specifically had a slowdown. Bottom line, I mean, the growth had to slow down at some point, did it not? It seems like they believe AI has cooled off a little bit for the summer. I just think we had a big mass onboarding, and now people are kind of exploring how artificial intelligence and this kind of, not so slow, this march towards digital superintelligence or synthetic intelligence or artificial general intelligence, right? Like a system that has like a theory of mind and agency and the ability to like self-edit and self-code. And so then you really have like real self-evolution in these systems. Well, we're not there yet, but we're marching towards that. So right now, people are just grappling with all this kind of stuff. It's quite interesting. Okay, I promised you some cool stuff from BlackRock. Well, it's not that cool, but it is BlackRock. Just remember, man, these are opinions.
Yeah, well, that's just like your opinion, man.
Okay, so what the F? BlackRock, Fidelity, and Spot Bitcoin ETF applicants converge for a meeting with the SEC. Ooh, it sounds cool. It sounds interesting. It's not that interesting, and it's also not that abnormal. These kinds of, however, my guess is that you didn't see a meeting like this a few years ago with the Winklevi. They didn't march on in. Matter of fact, they're trying to stay out of indictments, Pat. Right, man? Right? They may have been indicted. I don't know. Gemini is a dumpster fire. By the way, anybody that has Gemini, get out of there. Get your assets out of Gemini. Those guys are douchebags. And I can say this with a clean conscience because I like Nifty Gateway, which is their platform for NFTs. But Gemini, the exchange, is a dumpster fire. Oh, by the way, real quick sidebar. Did you guys see that now CFTC is looking at possibly indicting for just a litany of offenses? Celsius CEO Alex, I have 200 millions of my own monies, Mashinsky. So just another douchebag. Anyway, all right. Let's get back to the ones that run the whole planet, which is BlackRock. So BlackRock, Fidelity Investments, and several other applicants for spot Bitcoin ETFs are scheduled to hold a meeting with the United States Securities and Exchange Commission. This meeting follows the refiling of their application with the SEC, which now includes information about this was the whole thing, their surveillance sharing partners and other necessary details. And this isn't surveillance sharing. It's not what you think. Probably you're thinking, oh man, they're going to know about all of us. No, what they want to know is where certain trades come from. They want to have all the information on trades to make sure people aren't doing bullshitty things with the market to screw people over. They want to know that people are not using this illiquid ass market, which they will, to pervert the price, which they absolutely will, to put cash in their pockets, which they will. But guess what? Newsflash. That happens in every market. This is no different. Just look at the Bitcoin and where it is, and like 80% of the Bitcoin is in like 10% of the wallets. Does that look like an even distribution of a currency that's going to change the whole planet Earth, and we're going to have some Bitcoin standard and all this kind of bullshit that you hear these ideologues spread? No, it's all bullshit. But it's good because BlackRock has talked about a lot of good things about Bitcoin specifically because they know they can come and skin it and F investors and put money in their pocket. You know what? I don't care. Come on, because BlackRock will help us help ourselves. So the meeting's not out of the ordinary, as the SEC staff regularly engages in meetings with ETF applicants following official filings to assess approval and or denial and to clarify their position. So what they'll do is they'll tell them, the SEC might say, listen, we're not going to say yes to this. And then they would go and they would pull their rule change submission, and then they would, take their application and rejigger it, and the lawyers would get back in there and, roll up their sleeves, so to speak. Anyway, according to a Bloomberg ETF analyst, which, take that for what it's worth, the meeting is essential for discussing the potential of a spot Bitcoin ETF and addressing any required amendments to the existing rules. They stated that it's important to note that while this information comes from reliable sources, it hasn't been fully confirmed. Well, nothing's fully confirmed. And even if it is, sometimes news agencies just choose alternate news, alternate facts, because there's no accountability in the whole planet. All right. Nevertheless, the SEC staff regularly engages in meetings with ETF applicants following official filings to assess approval or denial and to clarify positions. Under Mr. Gensler, who I feel like his time is probably coming to an end. Anyway, the SEC has consistently denied the approval of spot Bitcoin ETF while approving similar ETFs. And this is where the grayscale, quote, arbitrary and capricious arguments come in. And that's how they believe the SEC is behaving. And I think on this one, they're right. On a lot of the other stuff, I don't disagree with Gary Gensler on a lot of stuff that some people do. I think his heart either is or was in the right place. That said, the way they've treated the Bitcoin spot ETF does seem arbitrary and capricious. And then first they would say, well, the custody solution is not right. We don't trust the custody. So they fixed that. And then they said, okay, it's not the custody problem. The problem is really surveillance. And they fixed that. Well, it's the way you word it. Okay, Gary, God, like enough is enough. Quit bullshitting. Like, fix this and we'll say, yes, you fix it. Well, now fix this. No, man, you're just moving the goalpost. Don't be a dick, Gary. Anyway, it's believed that the approval of a spot Bitcoin ETF may be on the horizon. Well, everything may be on the horizon. Do you see that green laser bolt thingy that shot through Vegas or whatever it was? Like, yeah, lots of things like an alien landing may be on the horizon, but wake up. Anyway, BlackRock CEO stresses the democratization and cost benefits of Bitcoin ETFs, right? Because Larry Fink, that's his real name, gives two shits about anyone but Larry Fink. Get off the gas, Larry. Anyway, the CEO of BlackRock emphasized their intent to democratize cryptocurrency and reduce costs through their ETF filing. Right. Fink expressed confidence in the approval of their latest ETF application by highlighting the firm's positive track record of collaboration with regulators in the past. Yeah, and the fact that they have dirt on everyone, they'll murder you if you get out of line, and they have trillions of dollars. They have more money than many countries on earth. Oh, but yeah, they want what's best for Bitcoin investors. Yeah, because Larry Fink wakes up every night. He wakes up at 3 a.m. in a cold sweat thinking, how can I make life better for the disenfranchised crypto investors? No, bullshit. Larry's like, hey, how can I skin this? Because I know that 80% of the Bitcoin is in 12 people's hands. I have some ideas. Yeah, of course you do. That guy's like such a crook, man. Anyway, whatever. It doesn't matter. No one's a crook. It does not matter. Anyway, BlackRock is actively seeking regulatory collaboration to secure approval for their spot Bitcoin ETF. Related, Grayscale seems to be pursuing their court case. Even if the SEC allows the spot Bitcoin ETF to go through, matter of fact, that might even kind of embolden them to push harder, because they do believe that they were getting stuffed, thwarted by the SEC, and that was where the arbitrary and capricious stuff came in. But Grayscale's not Larry Fink, right? So that's that. Great. Well, there's the news. It's kind of cool. I mean, a spot Bitcoin ETF will be great for all of us. However, there you go. Let's see. Been out of the loop. Sophia, TGE, July 18th. No, that's not I don't think you're accurate on the TGE. I think the TGE is the 25th. I would check that again. Unless they changed it yesterday. Yesterday, it was the 25th of July. I don't think it's the 18th. I think that may be the end of the, anyway, just check your data. I know that if you go to the Singularity DAO page, you can probably get all of the data on that. Yeah, I think, okay, so let's finish out today. I think that if BlackRock because remember, if BlackRock goes through, so does Fidelity. It means there'll be 2 or 3 spot Bitcoin ETFs. And if that occurs, 1, these markets are going to be even more perverted than they already are. 2, a crap box full of money is going to come into the space. And yes, a lot of it will be in Bitcoin, but you know what? What's good for the goose is good for the gander. And as you know, the altcoins tend to outperform the Bitcoin. So don't get sticker shock and look at the big number and think, oh my God, Bitcoin, it's 60,000, it's 70,000. That's amazing. Yeah, that's a 2x. That's a 2 and change X from here, not even 2.5. So, and then, or you look at AI assets that have done 10, 12, 20x, or you look at protocols that have done 100 or many hundreds of X's. So it's kind of like, where do you want to be? I personally am not a big fan of Bitcoin. I think it's cool. I think it's amazing. And I think it set the tone for everything. I think you have a very small handful of individuals, many of whom, let's be honest, they got real lucky. They had no clue Bitcoin was going to do everything. Then you have the second tier rich guys that came in that did have money, and they bought early and they bought consistently, and they make up the bulk of the ownership of Bitcoin. And then you have the mining community, which is really about 4 or 5 big mining facilities or mining consortiums that have all the mining power. And so then you have, there are, some questions there. So Bitcoin is cool. I don't think there is ever a world where Bitcoin is the standard for all current. Bitcoin is not a currency. I don't think there's a world. I can't imagine a world where this whole kind of Bitcoinization, the Bitcoin standard, it's all bullshit. It's just currencies need elasticity. Bitcoin is not elastic, and it's owned by like a handful of people. And so that's just, to me, that doesn't seem like a kind of currency that could manage all of the world's very, very complicated woes. That's even dumber, in my opinion. And again, I'm not hating on Bitcoin or Bitcoin ideologues or even Michael Degenerate Gambler Sailor or any of these other dudes. I'm just saying, like, maybe other assets are more the answer, like central bank distributed currencies. And real quick, I think your nomenclature is wrong. They haven't changed the TGE. TGE is token generation event. I think you're getting those things. The token generation event is after all of these things are finished, when the token is actually sent to wallets and sent to exchanges. That's after all of these things. That's July 25th. So yes, you're right on the dates for the private rounds, but that's not TGE. TGE, token generation event, is 25th. And that's when the token's available to everyone, regardless of where you live. All right. Have a good day. Stay out of trouble. Stay in school. Don't do drugs. Don't do anything that my poor, insolvent, drunk, strung out on meth grandmother would not do. If you want to keep up with the latest shenanigans, if you go, we have nickblacknext.com. That's just a place where if I'm doing some kind of cool crap that's directly or indirectly related to like the cryptos, social media stuff, things like that. You can jump on our little mailing list so you can keep track. We don't inundate you with nothing because really I'm too bored to send out anything that's not important. All right. And remember, as a general rule, be careful on links. Be careful if there's a lot of text message scams going around where it'll like text you like, oh, you're owed this much money. Click this. Don't ever click a link on a phone. Ever, 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 ever. Do not click links on phones. They will F you. Not from FedEx, not from UPS. That's one of the big scams right now is like, oh, you have a package waiting, blah, blah, blah. Just click here. No links. Type it in, people. Don't get lazy. Type it in. All right. We'll see you soon. For those of you that are going to join or that may have joined or are part of the digital heavyweights, join us tomorrow for that. And otherwise, go slow. You don't got to own everything. Just go slow. Don't blow up your damn portfolio doing stupid stuff. Don't make all this money just to give it back. Everybody everywhere is trying to steal all your shit. Be careful. Deep into investment management, game theory, cognitive bias, and the connection between cryptocurrencies, digital assets, and artificial intelligence investing. It's called Digital Heavyweights, and we do 3 private educational streams per week. You also get up-to-date news and research created by a team of writers and analysts that curate data from my personal investment portfolio. We do the heavy lifting for you. Join me and hang out with us Mondays, Wednesdays, and Fridays in the Digital Heavyweights. Boy, that sounds really rednecky at the end.